Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your weekly technical analysis of Paris Rapeseed, Winnipeg Canola and Malaysian palm oil markets.
Paris Rapeseed. Once again, and for well over 3 months, I have to say it was, and still is, though I'm thinking may not be for much more, it is still a pleasure to give commentaries here. Why, say you? And I say because of the beauty of the patterns that show themselves. And the Paris Rapeseed daily chart has exhibited such beauty here, though I have to repeat, I'm not sure for how long. There are still 2 key patterns here. The first and larger one is the February 2021 to July 2022 ascending broadening wedge pattern. This has now disappeared up off over the top left-hand corner of my daily chart. To be honest, it is a large but imperfect pattern, yet it has been the main market driver higher in the early part of 2022. The break lower in July last year left the following incredible targets on the downside, which I highlighted back at the time. The primary target X is in the 352 even area, with a harder to reach secondary target X1 in the 217 area. These were, at the time, well, pretty much way out there targets that you could put into your diary on the back page and just look at maybe once or twice a year. Not so now, as you can see target X slightly obscured, but still there towards the bottom of my daily chart. There was also, and still is, but it is being vigorously questioned right now, a new smaller pattern, though it deceivingly looks quite big on this daily chart, is the early July to late October 2022 bearish Andrews pitchfork. And this is where the joy came in. The market has since October last year moved down within this bearish pitchfork, mainly between the middle tine below, currently at 376, and the upper tine above, currently at 446. You can clearly see the tines of this pitchfork on my daily chart. They're highlighted in purple. Recently, a new feature has emerged as the market dropped down towards the middle tine, along with the emergence of some old supports from 2 necklines which are very close together. These necklines are generated from the November 2019 to February 2020 move. They are at 399, highlighted in bright red, and 401, highlighted in dark green. These are also close to the December 2020 low at 396. 3 weeks ago I said these would be the next area of support along with the middle tine, and so it became, over the end of May. The necklines in the December 2020 low were both penetrated, but held, and then we saw the reactionary move back up. This was in a free area up to the oft-mentioned congestion overhead between 438 and 446, which includes a flatlining short-medium moving average, currently 438 and a quarter, and is at the end of this week, the declining upper tine, currently at 446. So it's at this point I'd like to discuss a strong possibility, given what is happening in the other markets, of Rapeseed here exiting up, out through the upper tine, and at least breaching, if not breaking it. Personally, I think this move higher has come very late, but not impossibly so. You see, in the next day or so, the upper tine would have entered the 438, 446 congestion area, thus reinforcing it even further and making it harder to push up through. Hence, today's close over it, as long as it's followed through higher in the next few days, is very important. Looking higher, we next have another congestion between 460.5 and 468.75 that contains the 2013 high at 464.25 and the June 2021 low at 468.75. Additionally, we have the now shallowly declining medium moving average, a little higher up, currently at 475.25, that may come and reinforce that area. Beyond that is a wider and perhaps diaphanous congestion between 491.75 and 504.5, which has the July 2021 low at 497.5 and a small gap from March between 497.25 and 497.75. The next few days could turn out to be crucial for this market. Winnipeg Canola. The drop over May went as far as breaching the 2021 low at 629.5 2 weeks ago. But the day after the low, we had a bullish engulfing pattern, the low itself being an indecisive spinning top. So it wasn't that hard a pattern to construct. We've since seen a move higher, away from the 2021 low, up through the June 21 low at 655.90, and up towards The combination of the declining short-medium moving average, currently 702.80, and the newly drawn 2-pointer downtrend from early March, currently at 704.70. Just above this is the old July 2008 high at 610.80. And this level is interesting, as it is the gateway to congestion seen throughout March, April and May, up to the July 2021 low at 761.90. It also has the declining medium moving average, currently at 745.20 within it. Now, 22 weeks ago, yes, 22 weeks ago, I raised the following point, and I've been mentioning it ever since, and I quote, "There is just the thought of what may be the whole April to date action," that is April 2021 today. So April to date action, it can be seen as part of a very large bearish halfway hesitation. It's all still too early on these thoughts, but I think they need to be present when things start to happen, eventually. We were further along this course 2 weeks ago, and thus came closer than ever to looking at this action as a possible, very large bearish halfway hesitation. I've even laid out potential targets below for such a pattern, with a possible downside target X down in the 560 zone. Previously, I'd suggested putting this level in the back of your diary and even looking at it every so often, just in case. The only issue was that it is now sitting at the bottom of my daily chart and is therefore a lot closer than some might imagine. However, I have a suspicion that while I still may keep it on this daily chart, its very existence depends on what the market does upon approach to the short-medium moving average and a downtrend combination, and then the congestion overhead between 710.80 and 761.90. Bursa Malaysia crude palm oil. In late 2022, the small but effective reverse head and shoulders pattern that presented itself at the time, amongst other factors, caused the markets move up into early November last year and the construction of a new, mildly bearish pattern. It is this mid-August to early November 2022 mildly bearish shift pitchfork, which is highlighted in dark green on my daily chart. This mildly bearish pitchfork has guided prices, more or less, lower, initially in between the upper tie, currently at 41.96, and the middle tie, currently 35.63. Despite a number of attempts lower throughout the bearish pitchfork's lifetime, prices kept reverting back up, gapping higher in early May. But, and this was interesting, for a lower high in early May than in April, and also than in March. The action created an island top back then, and the gapping fall in mid-May caused the move eventually below the middle time. 2 weeks ago, the market properly exploited the move lower, and we had to look at potential targets below for the island top. The primary target area for this pattern was in the 35.25 zone, and a secondary hard to reach target in the 34.10 zone. In reaching this target, a market, which it did both of them, the market overshot on the downside, down to through the January 2021 low at 32.51, but not down to the interesting past price action in November 2020 of a gap between 31.65 and 31.88. This gap was partially filled back in September last year, but it's still an open gap, if smaller. Well, the market turned up before then from this tweezer bottom and has climbed up to once again test the middle tine of the bearish pitchfork in dark green, but from below. The question now is whether this is a bounce that might fill in some or all of the gaps, or whether there is a major change taking place. Right now, the former is more possible, as all moving averages are either gently heading lower or sideways. The short moving average, currently at 34.40, is the only one that might possibly turn up. But then we also have to look at how far we are away from the next overhead moving averages. The short medium moving average, currently at 36.97, is the nearest to the medium moving average at 38.31 above that, and both are still far away overhead.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.